Good morning, everybody, and welcome to the Daily Plant FOMC edition of all things, right? Um, okay, so quick review of yesterday, and let me just pull up some notes. There's a couple points I want to make sure to make. So bear with me for 1 second. Technical difficulties this morning as Windows updated last night, and so things aren't working the way they normally do, which seems to be par for the course for me. Okay, so so here we are, basically flat to the close yesterday. We had a little bit of a pullback. Yesterday was a narrow range day, less than 30 points, I think it was 28 points, etc., or something like that. Let's just look at this so we don't see the continuity. And so yesterday's close was here. Yesterday's low was somewhere down here, 26. The high was right about here, near 65, and we're stuck in this zone. Of interest, we have the IC whale once again present today. And since we had a narrow range day, rather than selling volatility, he bought roughly the 30-something delta put and call at 68.60. And let's get another whale. You guys can watch my wonderful artwork down here at 68.15. Okay, so these are long, not short. He bought these, saying that we're going to go through the expected move. We had an expected move of about 45 yesterday at the close, when we closed at 68.40, so roughly 68.85-ish on top. Oh, great. We'll worry about that. Roughly 68.85-ish on top. We've kind of locally been topping out there. Last Friday, we teased 6,900. It's below 68.20 area, which has been a pretty solid area. 6,800 has been a pretty solid area. We've had a few tails there, but we haven't closed down there for quite a while. And that's the whale's positioning. And oh yeah, I'm on camera. Good morning. Now I'm turning to my other PC. So my laptop. So interesting observation. I was reading a note from Goldman Sachs where they noted that, quote, the FOMC straddle has only realized 1 out of 12 times in the last year. So let me break that down into English. What does that mean? So today the straddle is 45 points. For the straddle to realize, we would have to move over or under, we would have to move over 45 points in either direction. So basically saying that for the FOMC in the last 12 FOMC meetings, and I didn't fact that Goldman Sachs, I'm just going to pretend they know what they're talking about. That doesn't mean that intraday we didn't bounce all over the place, but close to close, we've stayed within the expected move. So if history repeats itself, if, I don't know, your crystal ball is as good as mine, we stay within the expected move, 90, whatever that would be right now, 85-ish on top, below 6,900, and 67.90-ish on the bottom. We have the 20-day moving average kind of below at 67.60 70, something like that. And we'll look at the gamma setup to get a more granular view. Yeah, let me answer this question while we're talking about it. Okay, good question, and let me answer that. There's a few nuances in there. Yes, we typically say range bound before the event because everybody is just waiting. The other thing that stays before the event is the straddle price. Typically, we have a straddle price decaying, the expected move becoming less as the day passes, which makes sense. Between 9:30 and 4:30, we expect more movement than between 12 and 4 o'clock, rather, or between 1 and 4 or 2 and 4 o'clock. So we expect the straddle price, the expected move to decay, but it typically doesn't. And typically, what happens is if you sell a spread, it doesn't matter what's going to happen. Basically, it doesn't decay. Basically, whatever you sell is going to pretty much stay at what you sold it at. So that's why the closing at noon might not work. You might not get a chance to close it at noon. It might be worth what you sold it for. That's the fly in the ointment with that idea. On a normal day with not FOMC, yeah, that would be a reasonable thing to think. No free money. Yep, no free money today. Nope. The possible free money, and I haven't done this in a while. I used to buy, somewhere around noon or 1 o'clock, a SPY, let's just say a 40-inch delta call and a 40-inch delta put, maybe, and make it a debit spread on each side. So kind of buy an iron condor a little tighter than what he does and make it wider, like a little less than the expected move. So we'll use SPX numbers. Let's just pretend we're here. I might buy a 50, 70 call debit spread and a 20 or 25, whatever, put debit spread before the meeting and put in a closing order on each side at some random profit thing. Let's just say I pay 8, put in at a 12 on each side. And typically what happens, I do that and they close. My timing is not fast enough, whatever, but we get those crazy moves. I haven't played that game in a while. I'm not going to play it today, probably, but just kind of throwing that out. Okay. Now, typically for me, this is a snow day. In New York, we used to have a snow day. Well, I'm in New York again. When I went to school, and snow day was like you stay home. Really no trading. I can mess with long-term trades, maybe want to play with an Oracle trade or something, earnings, Adobe. Probably going to look at some kind of Adobe volatility type trade. My expectation, since I'm down this rabbit hole, just like Salesforce software had been beaten up and then into the earnings, it almost didn't matter what they said. They went up, expecting maybe the same thing with Adobe. I'm not expecting maybe. I'm expecting similar reaction to Adobe and maybe Oracle. Oracle, there's more variables in there with their CapEx spend and their deal with OpenAI and their deal with whoever they've been signing deals with. So Oracle's a little muddier. So yeah. So anyway, getting back to that. Okay, let's take let's get to volatility real quick while we're over here. Okay, great. You see, this is why I never close. Do I have it here? No, I have it here. Where's my 6 panel? Here we go. Got my 6 panel there. Okay. So VIX spiked in the morning to over 17.5. So remember, a VIX of 16 is roughly a 1% expected move, so that's 60. So something's not lining up here. The VIX future spiked to all the way to 19. That's now remember yesterday I pointed out that the VIX futures and the VIX were roughly the same, or that the difference wasn't what we would expect. Now the difference is even more. Now the difference is even more. I expect that to come in which direction, I don't know. VIX, when we look at the options positioning, we'll look at VIX and VIX options positioning, and basically over right about 17.5 is where we get into a stronger market maker, negative gamma, kind of pull up toward 20, and over 20, then it could get even uglier. I'm not expecting that to happen, other than maybe, if we get a little spike. Switching gears again, so that's what's going on here in volatility. The VIX 9-day is not going to print until after the open, so we really can't say. But since the VIX 9-day has this Friday in the calculation, remember it's 9 days. It's a Friday that brackets 9 days between now and 9 days from now, ahead and behind, which puts us this Friday and next Friday OPEX. So the VIX 9-day is going to tell us a lot about the near term. I expect, with the VIX and the VIX 9-day having been elevated recently, all that elevated premium just has the potential to create a tailwind. Potential. Okay, now let's go to the gamma profile. And so here we are. So we're roughly, we'll just call it flat. We're roughly here, right here. Now, these numbers aren't huge, so let's not get that twisted right off the bat. 1,000 contracts, whatever it is. Here's the IC. We'll get to that, man. The point is, these numbers aren't huge. And so if we could, if we open where we are, there's a potential path, negative gamma market makers kind of hedge in this direction towards 60, round number 50 in here, potential. So maybe, we kind of zoom up to here a little bit, 50, 60, stall out over here at the 65, 70, kind of yesterday's high area, and then kind of get caught in this triangle, 65, we have 65, 45, 50, 65, we'll call it 65, 50, 35 or 40, get caught in this triangle here somewhere. 45, 50, a nice mid to get caught, nice mid triangle to get caught in. If we kind of break below where we are, 30 is the next stopping point, roughly yesterday's low. And we kind of have a 25, 30, 30, 25, 20, this kind of little fly looking structure here that we can kind of get caught in for a little while. And we have the IC whale long put strike over here. Now, I want you to notice something, or I noticed something. Over here, up on top, the calls, there's somewhat of a ladder up. Below where the long put is. So here's the long put, here's the short put. It's a 5-wide debit spread. Below, we've got market maker long gamma kind of stally feature. So the gamma tells us that the 68.15 realizing and paying is less likely than the 68.30, than the 68.60. The 68.60, there's help on the way up. Granted, we have this stuff stopping it here at 65 and 70. To the right is support resistance stall. To the left is acceleration in that direction, in both directions. So hawkish cut or not hawkish cut, whatever, inflation, all that bullshit. Market participants seem to be willing to bet that we're kind of going to stay near the 6,800-ish level. More bets at 66, 67, 70. And if we break below 60, then there's kind of a long way down, all the way to 67.25, and then we're back in the mess. Let's look at market maker exposure. And again, one of my pet peeves is when people say we're in long gamma or short gamma. Yes, market makers, another note I read, market makers are broadly long gamma. What does that mean? Lots of calls sold up here, lots of puts sold down here. I read they're at 65% exposure, so they've been longer, so there's more room to go with that. But that's great. Locally, though, we're a negative gamma. Locally, market makers are short gamma, and that's what we're worried about if we're short. Not worried about. That's what we have to think about as short-term traders. What's going on over here near where we are? And so, yes, extended moves will probably be muted, but within the 69.10 to 67.90-ish area, anything can happen. And of course, if there's some kind of crazy narrative, and that's hawkish cut versus dovish cut versus neutral cut versus all the leading questions they're going to ask at the during the press conference, and we remember next week, along with VIX expiration next week and options expiration next week, we also have thrown into the mix the non-farm, the delayed non-farm payroll, which is coming out, which the Fed will say we need more data, so we're waiting for that next week, and a couple more data points until the FOMC into January. So I just think they kick the can down the road. That's kind of what I think. Quick look at this, and I'm gonna bring my buddy Chewy on. Let me just add something real quick. Range 2. Let's take it to January for fun. Okay, so I've been saying since October that we're going to be heading up to the JP Morgan collar at 6,700. When we were at 6,500, I looked crazy. Now we're at 6,900, almost 6,850. I don't look quite as crazy. And you see here, these are customer long bets along this path. Along this path up to the JP Morgan collar. Customer long 69.50. There's been a lot of bets coming in at 69.50. More long bets here at 6,900. All right, so we have a little bit of stuff here at 68.35, 67.70. We have some negative gamma below us, but not a lot. 6,600 is kind of like the bear bet. Could we fall apart? I don't think we do. And so for today, and I'll be talking more about this stuff, as time goes on. So for today, we see pretty decent positive gamma numbers. We look at the contract numbers over here between 68.10, 67.90 all the way down to 67.70. So unlikely that we realize to the downside. Plus, the hawkish cut is priced in. So if we get a hawkish cut, that's already priced in. So how upset can they get? It's already sort of priced in. To the upside, you see red. That's a path in that direction up toward IC whale. Long strike. He's long this time. A little bit of stalling stuff here at 65.70, 75, but there's still some 6,900. There's still calls up here. And if we look, we see red. We see people making bets. We go in this direction. Okay, we also see bets. So the VIX 9-day that we've been seeing spiking, that's these guys. That's people, that's the long puts down here below us. But not that far below, we have all this sold stuff. So we have a few local bets at 6,800, 67.75. Okay, great. So we go down to 75, big deal. But below that, it kind of looks pretty clean into the end of the week. Let me show you this. So last Friday, here was the expected move. Friday to Friday, 67, 65-ish, the 20 DMA-ish, where like the positive gamma comes in. And the top of the move was over 6,900 all the way to 69.75-ish. And so far, we're respecting that. As you can see, we've had a couple of weeks of basically marching in place, and that's where we are. Anything else to say? I think that kind of sums it up for now. So I'm going to relinquish the, whoops, is this it? Yeah, okay. I'm going to let my buddy speak.
Good morning, everybody. Sharing the screen now. Not entirely done with my prep this morning, so when I post my picture in the cheat sheet room, you might see it a little differently, but I'm about 95% done. We're currently in this range. The range that I'm seeing is going to be from about 858 down to about 838. These are ES levels, of course. What I'm looking for right out the gate is, can we hold below 68.51, call it 68.58. Between those two, if we can hold below that, that is my reject zone. I'm expecting a move down to here. If this is our floor, so I'm kind of going to call it from here, given that we're expecting a little bit of sideways movement, consolidation, whatever you want to call it, into FOMC. But if we can break below the floor, I think we can have a nice 10-point move down. This bounce zone that I have here, I would say it's on the weaker side. I'm not marking it weak just in case it does have a nice bounce to it, but I would say go by the sizes of my zones. It should kind of give you an idea of how big of a reaction I'm expecting. Not too big of a reaction here. However, if we do get down here to 6,800, 6,810, I do expect a better bounce, which would be around 6,800 SPX as well. Less likely, but if we can break above 6860, then I can see a path up to 6890. Again, less likely. I'm not too much of a bull today into today's session, given that we're right in my rejection zone now. If you look at yesterday's zone, we opened in my bounce area and we took it all the way to the top. So I think we've been trading this range for quite some time, as you can see, but that's kind of what I'm seeing from now. Just come down, maybe a little bounce, and I'm expecting a bigger move down. However, it's FOMC. It could come tomorrow, if it is going to come at all. I don't have your ES levels on the string yet, Doc. I haven't seen those go out, but
yeah, I haven't gotten them. I just got the SPX. I just
Okay.
have to do that. It'll take me 2 seconds or a minute or two, whatever. Actually, that's what I'm doing right now on the other computer.
Anyone have questions for me on this?
So basically, you're looking for maybe a 10-point scalp in one direction or the other.
Yes, but if we can let go of that 68.37, which is my floor, I think we do have a pretty good move down.
Okay,
Nice,
so if anything, you'd be
25,
looking for a little downside move and test rather than an upside move.
Yes. Yeah. And just because I see price come this way a little bit, just up a little bit, that does not negate this reject zone, and I could expect to move down. So I'm almost expecting a quick little sweep upside and then back down. But that's what I'll be looking for closer to open.
Okay. Like I said, I would probably look for butterflies or something targeting each of the IC whales, long strike 68.15. So that'll be like 25-ish, a little bit below in that area on the downside, and targeting 55.60 on the upside, and just kind of try to buy something and scalp it and just kind of play around and then kind of see where, where the chips, no pun intended.
Right, and
where the
that'll
chips
kind of
fall.
come clear after the presser, I think.
So 55-ish, 60 maybe on top. I would look for a scalp in that direction. I would look for a scalp in the 20-ish, 25-ish, yesterday's low area going down there. I would do it with a fly of some sort or a debit spread, just so that I have a little more flexibility. Although, since volatility's going to kind of stay bid, it's a better day to it's a day that one might want to consider just straight long options because they're not going to decay as much if you have to hold on to them. That said, I'm a theta junkie. I can't remember the last time I just bought a long option. I always have some kind of debit spread, butterfly, condor, multi-leg structure. That's just the way I look. Okay, so 9 o'clock. As I'm trying to get that string written, let's just put this back. And there's really not much to say. Oh yeah, so breath was kind of mixed yesterday. Breath started out strong. See, breath started out strong in the morning and then slowly waxed, slowly got less and less toward the end of the day. Yesterday, just in the gamma weeds for a second here. Let me see if I can find this. It should be in my Discord somewhere. So in the Doc's commentary section of the Discord yesterday, and I got it wrong. I'm not ashamed to say it. I got it wrong yesterday. Toward the end of the day. Where was it? I didn't. Okay, so at around 3 o'clock, I don't know if you guys can see this, I was looking at this structure. And we had 68.50, 55. We had market maker short, customer long calls up here. And we were kind of in this range. And my thought was that, we could get above this 68.45.50, the gammas would flip and would pull us up. And yes, we had this 40 down here too as a magnet, but I was thinking we were going to go that way. Turns out that what happened, those 68.45 short calls, short puts, were actually part of a debit spread that was over here, and they added to the 68.50 puts instead of monetizing them. These calls up here closed at 68.55, and instead we got sucked down. Instead of getting pulled in this direction, remember, these are customer long puts, they're decaying or charming to a -1 delta, pushing us down. There's a lot more pull down to the 40 than there is stall at the 45. So the opposite happened. I'm pointing this out, like I said, I was wrong. I'm pointing this out not to say right or wrong. I'm pointing it out to show you how one can use this for end of day pins or intraday to see where we might go based on positioning. And we talk about this. We talk about this on the open mic, and we show screens and we discuss. I'd rather teach you to fish than feed you a fish. Although if you're hungry, sometimes there's fish laying around. And yeah, that's it. I just wanted to point that out. I even had something written out on a screenshot somewhere, but I don't know where it went. What's this? I'm not sure what that was. Well, that was after the close. That's I'm showing you. I'll put this in my note. See, I'm showing you where the IC whale is. We have this kind of bounce attraction zone. I like to look in triangles. We have this triangle zone. I always write my notes in zones. We have this zone here, 15 to 60. We have this positive gamma zone down here, down to 90-ish. We have this choppy, messy thing between 70 and 85, whatever it is. And we do have a possible pull-up between this 70, whatever the number is, I can't see on the side, and 6,900. I put this in after the close. And so we've got that. Now that I've learned how to make those arrows on my screenshots, that's become part of what I've been doing. And that's it. Any comments, questions, concerns? If not, I'm going to go get my note out. I was late. I had some house-related stuff and, logistics things I had to take care of this morning that delayed my process a little bit. And that's it. All right, everybody, take care. Good luck. Oh, and I'll be doing something after the close. I'll get something out on Twitter with Master Bailey on YouTube. I guess he does it on YouTube. With Master Bailey, we did a joint post on Sunday over the weekend. We wrote a joint post, and then we're going to kind of come back and talk about it and compare the different methods. He's a price acceptance, standard, like what most of you traders do. I obviously do the gap. And so that's where we are. Okay, everybody, take care. Good luck.